Perfect. Hi, everyone. Thanks again for joining us for this exciting session that we have with our guest speaker today, who's Jody Kainge. I will go ahead and introduce him. But just before we get into our session today, I would just love to tell you about the great work that we do and introduce myself as well. So as Mapalo did mention, my name is Kabuela Marupande, and I manage entrepreneurship programs at Bongo Hive. So everything related to designing of the awesome entrepreneurship programs that we run at Bongo Hive, facilitating, implementing those programs. I do lead the team at Bongo Hive in that particular department. So with today's session at Bongo Hive, we always like to mention that we do work with great minds that are building viable solutions that change the world. And many people know us for quite a number of things. Some have heard the name Bongo Hive and they think we offer dance classes, salsa, kizomba dances, something for a gym. Others have got completely no idea around what we offer or do at Bongo Hive. So I'd like to just give you that quick background around the impact that we've made and just our work, the exciting and amazing things we do. So Bongo Hive itself, we've been 12 years this year, actually. We have been 12 years in existence, and we offer four main core things. The first bit is the entrepreneurship side of our department, which is super exciting, and I can spend the whole day talking about the entrepreneurship work that we do. But basically, for the entrepreneurship department, we're specifically focused on startups, very early stage startup, and those that are similarly at growth stage. And our role is we have three core programs that we run. One is called the Discover program, which is mainly for entrepreneurs at the idea stage. And we try to help them validate the idea through a 2-week bootcamp. So it's very intense and fast-paced. We want you to go and speak to your customers, validate your ideas, and know if really there's a problem that's worth solving in that particular area. The third particular program that we get to run and also blend across all of our programs is called Launch. And Launch is now you've moved from your idea and you are at an early stage. And so for that particular program, mainly it's a 12-week program, and we get to provide technical support to the entrepreneurs that go through our program. And our main aim for that particular for these particular programs is to enable the startups to reach a product market fit. So you are building a product that fits the needs and wants of your customer that you're trying to reach in the particular market, that's in which you're playing. The third bit for us, the entrepreneurship team, I'm still on the knowledge rails, is an accelerator program. And basically everything that you see around community, our accelerator programs run also about 12 weeks. And our role and goal is to provide technical support that enables the startups to get investor ready. So we do invite investors from the local ecosystem. We do have partners, for example, the Zambia Business Angel Network. Actually, we're about to launch another program that's running in September. Look out for it. I hope some of you applied. It's a called Mentor Pitch program. And basically what we try to do is grow firstly with our partners, local driven capital, angel capital into our startups, and also provide technical know-how on how you can reach other investors across the continent. Moving on to the other rail that we focus on, which is tech and innovation. We do have a tech team that's able to build a product from the ground up, and our innovation team, and we target corporates and startups as well in that particular rail of Bongo Hive. So basically the innovation team and tech team, let me speak to the innovation first. They focus on enabling startups to achieve a problem solution fit. So they're always looking at problem solution framing, user journeys and user testing, like that's the core of this particular department. And we want to ensure that you have identified a problem that will really disrupt the market and is worth solving. The tech team, after the learnings from the innovation team, are actually able to provide the extra support for building the actual tech products for our startups that go through our programs and also the corporates that we get to work with. The other bit is Hive co-working. We have physical infrastructure that gets to support startups in our community, small businesses as well, to just have the physical infrastructure in which they can set up and run their businesses. So we do provide affordable co-working space at our office here at Katima Mulilo Road. And we also, I like to boast that we have the fastest internet. And this is made possible by our partner, Liquid Telecoms. Funny story is almost every time I talk about how fast our internet is, there's always a glitch somewhere. So I hope that won't be the case today, and it will be smooth, and really it is the fastest internet. So the other layer to that is we just try to provide a space where co-founders and entrepreneurs can also meet each other, network amongst themselves, and also enable knowledge sharing. So that is a key part of it. And this is the ecosystem that we're trying to build. The last bit of it is Bongo Hive Ventures, which is still in the pipeline, and there has been quite a lot of background work that has been going on there. So what we're trying to build is a $15 million fund that will enable us to invest in the startups that actually go through our programs. So that's pretty exciting, and I'm super excited about that and looking forward to it. Maybe just a bit more context around the types of startups. You could be thinking, okay, am I the right startup for Bongo Hive? Who exactly can work with Bongo Hive, right? As I mentioned, for our programs like the entrepreneurship programs, we do work with pre-startup at the very idea stage, startups, and also SGBs and MSMEs, right? So SGBs are small growing businesses, and MSMEs, those are just micro, small, medium enterprises. We have differentiated the levels, the type of support we get to provide these types of businesses. And this is mainly because startups are more tech focused. That's at the core of their business model. But we have also identified a gap in the market where we've seen that there are other startups or other businesses, small businesses that need technical support, but are not so focused. Their business models are not focused on tech. So we do provide a specialized type of training for these high growth potential businesses from both the tech side, which is the startups, and also the non-tech businesses, which are small growing businesses and micro, small, medium enterprises. And the corporates as well. We often work with corporates that are trying to launch products in the market, and we're trying to help them with user research, and also especially on the innovation side and tech side. That's where we get to work with our corporate partners. Not to waste much of your time, I would like you to have a lot more time with Jody, who's our guest today. Excuse me. Jody Kainge came through, should have been early this week, Jody, and it was exciting to meet you. And basically, he was on a visit to just have a discussion around the startup ecosystem in Zambia, and it's also around them building pipeline for Octera Capital. Jody is a senior investment associate at Octera Capital, and Octera Capital is an investment firm that is sector agnostic and provides ticket sizes to startups between 100,000 US dollars to 500,000 US dollars. So early stage startups, but that have gained quite some significant traction in the market. Those are the target, and they're, like I said, sector agnostic and are looking at a pan-African approach, meaning reaching startups across the African country. Not to waste any more of your time, please welcome our guest, Jody. Welcome to the session, Jody. Excited to have you. And key advice to everybody as we listen to Jody, please take notes, pull out your pens. If you have a question, type it in the chat and we'll take them as they come. But if you'd like to ask at the end of the session, please write it down so that you do not forget. So Jody, welcome, and please take it from here. Thanks so much.
Thank you very much, Gabriela. And always great to engage and to see different people in the ecosystem. I believe I will share my screen at the same time.
Please go ahead.
Can do it right now. So I'm just looking at the time. Okay, perfect. Because I don't like to speak a lot, and I want also this session to be very interactive. So please do not hesitate to take as much questions as you want, so that it can be very interactive. So I hope also that the presentation will be not too long. I tried my best, but I also try to highlight all the different points that for me are critical to give you an edge with investors. So great. So brief introduction. So my name is Jordi. So I'm a senior investment associate at Octera Capital. So as you can hear it with my accent, I was born and raised in France. The job of, let's say, senior investment associate is to lead investment team. So I have like 2 analysts with me to be in charge of the due diligence, be in charge of the portfolio management, being also in charge of being able to collect all the data on the ecosystem, but also to display to the different stakeholders that we have. So it can be our LPs, it can be our startups, it can also be internally the team. So I'm doing a lot of things, I would say, but this is also how startups are evolving, because I like to say that we are also a little bit like a startup. So to make it a little bit more human, fun fact about me is that I'm still looking for the signification of my name, Jordi. So I have different theory. Some people think that it's coming from Spain, some from America, some that is Hebrew. It's Jordania, but if you have any theory for it, please let me know. If I'm not working, so I'm working a lot, but if I'm not working, you can probably see me watching Premier League and supporting Manchester United. So for the people that like football, you can see that I'm quite resilient in my choice. But yes, so on a much more serious aspect, so as it was said, so I'm working at Octara Capital. So we are early stage VC fund based in Lagos, but we are investing everywhere in the continent. So we have been investing in several companies, not only in Africa, but we're also investing in African founders that are based out of the continent. So today we have 14 companies in our portfolio in different sectors. So we invested in fintechs, we invested in health techs, in logistics. We even invested in a Web3 company. When we looked at an investment, we have, let's say, impact, let's say, scope. So you have those 6 different, let's say, glands of the impact. So I'll not go into all the details about it, but it's just to give you also a clear view on what we are looking at. And we consider ourselves as a value-added investor. It's very important for us to say that, because the value that you add to a business is, of course, the money, but it's not just about money. It's about also being able to support the company when they have like different operational problems, being able to connect the dots in your portfolio, being also able to leverage the network that you have for your company. So today, we'll be able to touch on the different bases and different topics. So I want at the end of the presentation that we can be able to have at least some snippet of answers about those different things. So first is, why do I want or I need to raise funds? It's a very critical question. What are the different sources of funding that are available? What do I need to consider before engaging investors? What are the expectations or constraints of investors? How to successfully engage investors? And something that is also quite useful is how do you succeed, let's say, your due diligence with investors? But on this topic will not be that much long, because I believe this one is a little bit a bonus. Raising funds. So I decided to compile a lot of reasons that I heard in the market when we are discussing with entrepreneurs. They can choose different reasons to raise funds. So it can be for growth, it can be for support, it can be because they need to pivot their product, it can be for a good PR campaign, for a lot of reasons. Today, it's very important when you decide to raise funds to decide your reasons. And I'm saying that because sometimes some entrepreneurs will realize that sometimes they don't need to raise funds. Some will realize that it's critical to raise funds, but it will also help you engage and understand a little bit more the use of funds. So in my view, believe that there is like different good reasons for raising funds. I'm sorry, I have a little bit of noise. I will just try to fix that. Great. So sorry, I'm dialing from Paris, which is supposed to be a little bit more calm than Lagos, where I'm based, but it seems that it's not the case today, so apologize for it. So I was speaking about the reasons why you would decide to raise funds. The first one is growth. You need to be able, let's say, if you consider that in order to increase your sales, but also to be able to add different products, you need to raise funds. It's a valid reason. Why? Because sometimes just relying on internal growth is something that is quite difficult. Scalability is also valid reasons. So to expand in a new geographies, you need a lot of capital. You need also different, let's say, things, but it all comes with money. So this is a valid reason to raise funds. The team, of course, and especially when you want good talents, you need to be able to pay them. You also need to be able to attract the people that will allow you to grow your business, but also to increase, let's say, the attractivity of your company. So this is a valid reason to raise funds. Operations. When you notice that you have some problems in your operations that you are not able to fix by yourself, it's also a good reason, because when you have investors that are able to see different business models that have been, let's say, operating in the space for several years, but also looking at different systems, they can come back to you with different solutions and different also views. So it's always something that is good. Something also that is coming with investors is knowledge and network. We don't realize, let's say, sometimes the power of network. And when you accept funds, being also very careful on trying to know what investors can bring you more than the money. So when you will, let's say, after the fundraising, you should be able to say that I was able to, and I am able now to see different source of information and resources that I can use for my business. And the last one, something that is also quite useful, is that because you need to pivot your company. I've been seeing a lot of companies that, let's say, operate without any funding in the beginning. The company is quite successful, but now they want to go through, let's say, a fully digital approach. So it's also a good reason to raise funds. Coming back on the next slide, perhaps if you want to raise funds for good PR campaign only, for loan repayment, for, let's say, endless capital infusion, so you believe that you will just be able to attract money and not report to do anything, I don't think it's a good idea to raise funds because it's not, let's say, valid and solid reasons that you can have to raise money and external funding. Speaking about external funding and the different sources, so you have a lot of different sources on the paper, I will say. So first, the traditional banks. Of course, traditional banks can be able to provide to you credit loans, but also working capital facilities on the paper. I'm saying on the paper because when you are a startup, you don't have a lot of historical data. You are not profitable. And those banks, I will say, especially in Africa, they will come with different, let's say, requirements that can be very difficult for a business. So if I can give you an example, today, if you want to go in a commercial traditional bank in Nigeria, you have a business that is sustainable, the interest rate will be around 35%, which is very high for a small business. After that, you have accelerators and incubators. So those players are quite diverse. Some of them can provide you also additional funds. Some of them can help you a little bit more on the operation and on different aspects of your business. So I believe that it's quite useful to know them, but also to approach them because they can be able to provide you sometimes free equity, but also sometimes they can give you like favorable terms, even if you give some of your equity. After that, the angel investors. So those are individuals who commit capital to support early stage startups. So you have quite a good network in Zambia that I know. You can be close to those kind of network and also to individuals that will be dedicated, let's say, to support you. After that, venture capital. And I want to disclaim that I put Octara Capital and just Lofty Inc. Capital and Launch Africa. Doesn't mean that I don't like the others. They are still my friends. It was just to choose. So we are a little bit, let's say, with like angel investors, but we are taking institutional, let's say, money sometimes. And I will give you also more details on the differences. You also have some different grant programs and subsidies. So you can be able to see, so in Nigeria, for example, we have the Tony Elumelu Foundation that is supporting entrepreneurs. You also have the Bill and Melinda Gates Foundation, but you have a lot of, let's say, different NGO and also non-profits organizations that are sometimes providing grants to different companies. After that, lastly, you have also crowdfunding platform that you can use. So I put the biggest one, WeFounder and Republic, but you also have more and more African focused crowdfunding platform that also can help you to raise money, but also to organize your fundraising. So I'm thinking about DABA, for example, DABA Finance. I'm thinking about Get Equity also. But today I will focus a little bit more on angel investors and venture capital. Before approaching investors, I believe that this slide is very critical. Engaging and speaking with investors is not hard, to be honest. What is hard is to be relevant and also to be able to match with the good investors. So through the different slides, we will go through different, let's say, section. So the first is build your 1-minute elevator pitch. Which is very important for me and quite critical. Do your homework about the investors. Sometimes startups and entrepreneurs do not realize that it's very, very, very important to know who you engage with, and don't be ashamed of looking in the LinkedIn profile of people and so on. And the last one is be ready to answer all basic questions that an investor may have. And I will give you also the questions that we are asking. Elevator pitch. This one, I believe the sentence is quite powerful. So an elevator pitch is an impactful, memorable, and short description of what you do and or what you sell. I remember that one of the first book on investment that I read was from Warren Buffett, I believe. And he was saying that he only invests in companies that are doing something that he can understand in 2 minutes. I don't think I'm Warren Buffett. I don't think I'm as smart as him, but I'm giving myself like 1 hour to understand the business. If I cannot understand the who, what, and how, it doesn't mean that I'm too lazy intellectually. It just means that the person that is building something is not doing it easy to understand. So the best advice that I give to founder is really to spend time to think about their elevator pitch and really being able to make it very easy to understand. Just keep in mind every time that you are speaking with a kid that don't know anything about your business, that don't know everything about your ecosystem, and you need to be able to understand what you are doing. Because if I don't understand what you are building, I will not be, let's say, receptive to all the different things that you will explain to me. So it's really important from the beginning when you decide that you want to raise funds to understand that you need to be able to answer to those 3 questions. For approaching also investors, you should be able also to identify if it could be a good fit for you. I will give you an anecdote, is that we are receiving pitch deck every day, and I'm reading all the pitch deck that we are receiving on our email inbox. Sometimes I'm receiving a pitch deck from Japan, from the US, from Lithuania, and just looking at our website, you know that it will not be a match for us. So I don't think it's the best strategy to just look at the fund and just send your pitch deck, because after that, you might lose, let's say, your chance to engage again with this fund or with this investor when you are building something that is a little bit more consistent. So you need to be able to identify if you are a right fit for this investor. The best method for that is to look at the website, look at the profile of the people that are working in the company, look at the press release also. So usually when we invest in the business, some of them are disclosing publicly what they are doing, but also trying to look at the weak signals. I will call it like that. So look at the type of people that we are connected with, look at the type of groups that we are part of, at the type of events that we are participating, and you will be able to identify it very quickly. So as an example, I put a little bit about Octara Capital. So this is an internal document, for example, something that we designed about what type of companies do we like to see. So you can see the investment stage, you can see the geographical scope, you can see the tech components, you can see also the pain points that we are looking at, you can see scalability, you can see the type of business model. Sometimes, I will be honest, it's difficult to have it, but you should be able to at least have an idea of the type of investors you are engaging with and if they can invest in your company or not. So I was speaking about basic questions. So this is also extract of one of our process is that ideally, after the first call or after reading your pitch deck, I should be able to have an answer to all of those different things. Who you, where are you located? What are you doing? How? What is your unique selling proposition? Why are you solving that? When? Competition, and I'm putting competition with a S, and I will give you also an anecdote to one of the next slides. For me, it's very important to speak about competitions and not competition. Market size, also something that is quite important. And on the other side, I will say this one is much more related to the funding part. So the cash needs that you have, the form of funding. So sometimes you should want, sometimes some entrepreneurs would prefer, let's say, debt. Some of them will be open to equity, but you should be able to know what you are looking for, the timeline. So ideally, when you want to close this round, even if it's as soon as possible, you should be able to have like a worst case scenario. The use of funds also, and you also need to be able to speak about like the cap table and the valuation. I will say that those elements here, you are not, let's say, obliged of putting it in the pitch deck, but you should be ready for it. You don't want to be in a meeting where an investor is asking you, okay, well, you want $1 million. Why do you want $1 million? I mean, or you will use it. And you don't want to be in a situation where you don't know why you need $1 million. So it's always something that some things that you need to keep in mind, and that will be also very valuable when you will be able to, when you will have to, not able, what we need, have to build your pitch deck also. Sorry. Expectations and constraints of investors. I believe this is also very important to be empathic and to also take sometimes the position of the investor. Allow you, let's say, to improve the way that you will present your company, but also to be able to target the right investors, but it will also help you to prevent all the different things that can happen during your discussion with the investor and even during your due diligence. So as investors, we have time constraints, and those time constraints can be multiple. So you can have the pressure of your LPs that wants you to close as soon as possible a huge number of investments. You can have the lifetime of your of your funds that can be, let's say, very different from what an entrepreneur will expect. But we all want, let's say, and VCs and angel investors, we all want smooth exit that will fit with our investment goals. So this is something that you need to keep in mind. Financial returns, because we are quite investing in things and businesses that are quite risky, we are expecting high financial return. So you should not be, let's say, shocked if an investor is a little bit, how to say that, non-diplomatical with the valuation and those different type of considerations, because we are all looking for financial return. as I took the example of Nigerian banks, traditional banks that are providing loans of starting at 35% today to businesses. Just take in mind that the VC investors need to have an IRR that is higher than that. So because we are looking for that, we are looking for exponential return, exponential revenues. So it should be something that you also have in your financial models, but it also is something that you should have in mind. Investment thesis. So we expect investments that will fit with our investment thesis. So I spoke a little bit about it before, and I can add details about it, but we tend to invest we tend to invest in regard with the mandates that we have. So if in my investment thesis or the investment thesis of the fund, we should invest only, let's say, in Africa, you should not expect us to invest in your business that is in Dubai, for example. Portfolio competition. This is also something that is sometimes tricky, is that you should also be able to identify if your investor have some constraints in terms of portfolio competition. Or you can do that, you can look at the website and the different investors, investments that has been doing, but you can also ask directly, are you okay to do portfolio competition? Because some investors don't want, let's say, investment that will jeopardize its other positions, which is fair. Expectations, also the constraints. We do expect to add value to your journey. We do expect also to support you in your operations. So you have a lot of investors that will reject the opportunity, not because only it's not a fit for them, it's because they cannot help you. I will give you an example. If you are, let's say, operating in Zambia and your investor is based in, I don't know, Vietnam, for example, and you don't know anything about Zambia, he might, if he's honest, I will say, he might say to you, I mean, I cannot invest in your company because I cannot give you value added, to be honest. Aside from the money, there is nothing I can give you. So it's also something that I've seen a little bit more investor saying also, that it should be like a win-to-win partner. But if not, you will be the one that is not happy with your investor. Unknown also. When we invest in your company, for sure, we don't know everything. So we expect that there will be surprise and there will be things that we were not aware before, or some things that will change. We want to avoid, let's say, any bad surprise or outcomes. So do not be surprised if your investors or potential investors are asking you, let's say, questions that are weird a little bit for you. If they're asking things about the regulation, about, let's say, the HR policy in your company. So you should also be aware of this, that we are risk taker. We know it, but we want to minimize the amount of, let's say, uncertainties in our investment. Approaching investors. So I believe that this one is the one that everybody wants to know a little bit about. I believe that when you did all this job before of being able to identify the good investor, being aware of their expectations, their constraints, also being able to build your storytelling about your company, this one, approaching investors, is easy, to be honest. First is that you need to use your community and network. We all have, let's say, a small community and network, and sometimes your network can be just your family, but you need to be able to leverage it. I will give you an example. I discovered, I don't know, several months ago that my big sister has a friend that is leading one of the best companies in Francophone West Africa. I was not good because I did not use my community and network. If it was the case, we would have been able perhaps to invest in this company that is doing something that is quite interesting. So this is the example of why you should use, let's say, your community and your network. If you are not doing it, start to do it update your LinkedIn page, start to engage with different people, speak with the Bongo Hive team, but it's something that is quite important. To be able also to use your community and network, you need to be physically and digitally where investors are. So we spoke about digitally. So of course, attending to those type of sessions is very interesting because it's not just about, let's say, me and the Bongo Hive team, but it's also about all the participants that are also in the room today. You will be able, let's say, to find people that after that will be part of your network and that you will learn from. Physically also, there is a lot of events happening in the continent. I'm sure that in Lusaka also there is a lot of different things that are happening. So do not hesitate to be present on those events. And sometimes also, you can also not be afraid to go to South Africa for an event. You should not be able, let's say, to travel a little bit more if there is an event that is really worth it and with people that can invest in your business, but also with companies that you could compare your company with. After that, be consistent, transparent, and straightforward. So this is a reminder from the elevator pitch. I will say that we all meet different people, but we have different way of engaging. And I think that it's always good to do a good impression and also to be transparent and straightforward. Sometimes I have people, for example, approaching me on LinkedIn. They will just brush around. I would say that it's part of my job. You can just say to me, hi, and we can speak directly and see if we have some synergies and so on. Sometimes we do not also realize that investors have a lot of interaction, and sometimes it's also very difficult for them to answer. I'm not speaking, I'm not defending myself. I'm speaking also for other investors that I noticed that will receive, I don't know, they will receive like 10 pitch decks per day, to be honest. And sometimes you just need to be like consistent, transparent, and straightforward so that you can communicate easily. The last one is also engage them early, even when you don't need them yet. It's always good to receive like some news of companies, to receive also some information, to speak also with people physically and digitally when they don't need, let's say, you, or they don't need your money. Sometimes it can be like, oh, I saw this, let's speak about it like for 15 minutes, more than happy. During a cocktail, you don't need to say, oh, I'm raising fund right now, but you can speak about what you are doing, or it can be interesting to look at, asking for advice or for feedback. It can be always good. And they think of engaging them early, even when you don't need them. It's adding them to your also community and network. So it's really, let's say, funny how this part is, because if you are ready before approaching them, it's quite, let's say, easy after that to speak and to meet investors. Common mistakes that entrepreneurs do when they engage with investors. And on this, I promise that I'm quoting. On the circle one, I'm quoting, and I will give you information why you should, let's say, avoid to ask those questions, but also to do those affirmations. First, I will say, in which startups did you already invest? It means that you are not able to do your homework. Just that. So it's something that you should avoid to do, because it's just in 2 minutes you can find easily the companies that invested in. And even for angel investors, at least you can find some of the companies. We don't have any competitors. Everybody has competitors. And when I'm speaking about competition, it's not just about the similar startups that are doing the same things that you are doing. Let's imagine a business tomorrow that is doing POS terminals. The competition is just not Visa. It's not just the startups that are doing something similar. It's also me that is paying with cash, for example. Why should people go on the POS and not on the cash? So especially in Africa, to be honest, it's not like just one competition, it's competitors. that you have. And if you say that you don't have competitors, either you are, let's say, not honest, or you didn't did the work of looking for your competitors. Can you write me a check right now? Yes, it's not a question to ask, to be honest, because sometimes you are speaking with someone that is not the decision maker on the first meeting, but also because I don't think it's a good way of doing business. This one is always funny. If you don't invest in our company, you will regret it afterwards. It's not just one company, I would say, but I have several companies that I met in the past and several founders. Something also that is quite important is that entrepreneurs should understand, and also VC, because we are also, let's say, fundraising, that a no of today is not a no of tomorrow. I have the example of several companies that we end up not investing in them, but we were quite happy to give them introduction to different commercial partners, to different accelerators, and so on. The goal of a VC and the way that we operate is that we usually invest in 1% of the companies that we looked at. And even this 1% is even high. So sometimes it's just not the right moment. It's not our mandates. There's a lot of different things, but you can still leverage, let's say, this relationship and not going into like something that is, let's say, conflictual after that. I don't know my revenues. I will let my CFO answer this question. So this one, if you are the CEO, if you are in the call, you should be able to know your revenues. It's a no-brainer. My valuation is above this number. This is something that is not negotiable. I'm sorry, but it will be something that is negotiable, especially now with the macroeconomic, let's say, situation. But I believe that it should not be something that is that should be like hard, let's say, topic. We should tell the truth. The goal for us is not high valuation, is exit. So if you are not able to deliver, let's say, something that is, let's say, matching with your valuation in the next round, you will be the one that will suffer, and we will also suffer because we're on the same boat. So it's always something that I believe it's always good to discuss about and to disclose. I am expanding in, let's imagine, Nigeria, because my investors want me to do that. No, it's your company. It's not my company as Jordi, Senior Investment Associate at Doctora Capital. It's your choice. We can have opinions about it. We can support it or not, but it's your company at the end of the day. This is your company. You should not take, let's say, decision based on trends or, let's say, anything that you saw in a magazine or someone saying you that, because you will be the one that will be accountable for this. And sometimes it's okay. Sometimes we invest in companies we are not okay with their, let's say, expansion strategy, but as soon as there is a rationale and we believe that it makes sense, that's okay. I'm targeting all the African market and I can win it easily. I'm one of these investors that think that Africa is not one market, that it's a market with full of subregions. The way that we are doing business in Zambia is really different than the way we are doing business in Kenya. It's really different than the way that we are doing business in Egypt, that you will do it in Nigeria. So selling, let's say, an African market is something that is quite risky, because as soon as an investor which starts to dig into it, you need to be very solid, and you need also to know your figures. So I will not advise people to say that. Last one is I'm building the African Uber, WeChat, and Amazon. I'm hearing that every week. I don't think that it's something that is sometimes relevant. It's very difficult to copy, let's say, a business model that is working in another geographies. You can do it, but you will have to do some adjustment. And those companies, there is a reason why they are working, let's say, in their home countries and not in Africa. So you should be able also, let's say, to build your storytelling on not, let's say, saying that you will replicate something that is exactly like those companies. After that, also some common mistake, but are not, let's say, questions, is not answering clearly to a simple question. To be honest, especially there is, we tend to, as human beings, we tend to speak a lot and sometimes not answering to the questions. So we should be very straightforward. And sometimes if an investor is asking you A or B, it cannot be C. The answer cannot be C. So it's something to keep in mind. Overstating your total addressable market. So for me, this one is related to the African market view. You need to be very careful with that. Especially if you are in front of investors that have been already investing in different geographies, but also that know their figures, literally. Sharing more than your pitch deck or teaser without consent. I will say that we like to receive the pitch deck before the first call so that we can not just discover different things during the call, but also so that we can just build an exchange with you. The goal is not that we go just through a pitch presentation and you can just speak about different things that are on the slide. So no, but so do not hesitate to send your pitch deck or teaser, but do not send like additional stuff. I don't need to see your financial model before your first meeting. I don't need to see a lot of different things. And after that, it will also be a risk for you, because if there is something that is, let's say, happening with your financial model or anything else, I mean, I don't want to be in a situation where you want to, let's say, sue me because you have been spreading your financial model and someone is copying your idea after that. So the last one is also, do not please invite any external parties without any notice. Because sometimes, and I completely understand that, is that because it can give you more comfort. But let us know before as investor. I know that there were some calls where there were like silent advisor or silent investor in the let's say in the room. It's a little bit strange, I will say. I have no problem with any fundraiser, for example, to be part of the call, because it's also their job. They can support you and they are paid for it. I have no problem sometimes with having an advisor or an investor that is part of the call, but you should like give us at least the notice of it. And I'm saying it because it's not a small thing when you are doing it. Be ready for the due diligence. And I will try to be quite quick on this because I'm looking at the time. Yeah, all of this, and I will say that in one sentence, investors are looking for transparency and comfort. This is what we are looking for. We are looking at a way to de-risk, let's say, our investments. So this is why the due diligence part is very important. And I believe that when you are ready, or at least when you start to prepare yourself for your due diligence, you are building like a huge edge with investors. So the due diligence is a process of an effort of collecting, let's say, and analyze all the information before deciding on conducting a transaction. You have a lot of different areas for the due diligence. So I just took some examples and also some supporting documents that you should have from in your data room on somewhere. So you should be able to have your financial actuals. You should be able to have your financial projections. You should be able to have a solid and strong competitive landscape of the company. You should be able to have like a strategic roadmap of the company. It will help you to better structure your company first, but it will also give more comfort to any investors that will be also assessing the opportunity, because we also be able to do the same. We will do the same as part of the due diligence. So it's always good to see that a founder has been able to do this job and to know that, okay, my company can work in South Africa, not because I just feel it like that, but because I've been doing a solid market study on South Africa. I've been doing a solid analysis on the competitive landscape, and I have, let's say, solid financial projections about the business. And on this, some doesn't mean that at the end of the year or in 6 months or in 1 year, you should not be able to change anything, because we are all human. So we can just change or do different assumptions, and so there's a lot of things that can come, but it gives the comfort to any external parties that want to invest in your business afterward. So I believe I was on time. That's good. Thank you very much for your attention, and more than happy to answer any questions.
Thank you so much, Jody. So we're in a time where you can ask questions. So just kindly go ahead and type in the chat. I saw a lot of people typing in the comment, so in the chat section, that they were following and really learning. And I kind of saw a lot of people stay on, and thank you all. So please, if you have any questions, if you need Jody to run through something you didn't really get, please go ahead and just take this opportunity. Those on Facebook, please feel free as well to be able to ask your questions, and hopefully we'll be able to look at them and be able to review them here. Thank you again once more, Jody, even as we wait for questions, for sharing. One of the things that I really liked was you did mention that, we must begin to engage investors even before, you're ready at times. And I felt that's something great for startups to actually get to know, because often people want to reach perfection. So we have a question, and the question is, how important is profitability for investors? Is it a must?
That's a good question. It will depend on the business that you are doing. It will depend also on the type of investors that you are looking for. I would say that for startups, company and tech, I would say enabling companies, we are not looking for profitability for now, but we are looking for a path to profitability, which is very different. Years ago, because and even last year, it was quite different. The ecosystem was quite different, and it was much more easy, let's say, to raise funds. A lot of investors were taking the assumption that companies can just scale, burn a lot of cash, and then they can be able, let's say, to reach profitability at a certain moment, when they will be able, let's say, to just burn cash, scale, having like a huge growth and so on. We do realize, and we are seeing it, unfortunately, that a lot of companies did not reach, let's say, profitability or pass to profitability. So when you are in a moment where in a economic, let's say, downturn, you should be able, let's say, to pivot a little bit your business so that you can be a little bit more close to profitability and break even. Us, when we are looking at business, and me, when I'm looking at financial models, I want to see profitability, let's say, that can be possible in 2-3 years, so that when there will be the next downturn, you can be able to switch a little bit your expenses, decrease your expenses, maximize your margins, so that you can, let's say, have profitability. Because the goal and the way that we are exiting is that we don't want dividends. I mean, we are not taking dividends. We either sell our shares. We just sell our shares. It can be through different ways, but we are selling our shares. So it's quite important to be close to profitability, or to be able to see the profitability quite close.
Oh, wonderful. Thanks for answering that, Jody. And we have more questions. So we have a question in the Q&A that, on the financial model on the pitch deck, how much information should be added or shared? Because I believe a potential investor will still want to have an idea. So that's from Tulani Ziva. He's trying to know that on the financial model on the pitch, how much information should be added or shared because they believe a potential investor would want to have an idea?
That's a really good question. I would say that you can just give a high-level view on your revenues. So you can go with your revenue for this year, the revenue for the next 2 years, and also, let's say, highlighting when you believe in your assumption you will be break-even. You don't necessarily need to go in all the details for the financial model. And also something that you can include is also put some of your non-financial metrics. So when I'm speaking about non-financial metrics, I'm speaking about like the GMV, the number of clients that you want to target, the number of geographies that you want to reach, so that we can be able also to visualize a little bit from the pitch deck where you are, where your company is going in terms of growth.
Okay, so if your question was answered, just please let us know in the chat so that he goes through. But thank you so much, Dodi. We have another question from Kondwani Ngulube. Says, after interacting with an investor, how does one ensure the relationship can be maintained, even in cases where the person could be a valuable network, despite them not investing in you right now?
Yes, that's a good question. Me, I'm a big fan of receiving newsletter and investor updates. You don't need to go into all the details of the, let's say, of your company, but sometimes it's good to, share every 6 months or every quarter or every year. Oh, I've been able to do that and that and that, so that I will still have, let's say, I will not forget the company, and I will still have, let's say, a good understanding of the business, and I can still see the growth. After that, it can be like, can be like soft interaction. Like, I don't know, if you're posting on something, I can just react. If I'm posting on something, you can react. We can have just a small and casual like chats, but it's not something that is hard, let's say, to do. No need to send every week's message to the investor, of course, but just doing like a investor update is also something that is quite useful.
Amazing. So Kondwani says that's noted. Tulani had also confirmed that you were able to understand. I've seen some questions in the chat. I'll get back to that. Let me just go through the Q&A. So Omelo Telemuka says, in agricultural, profits usually start showing maybe in the second year. Is that a turn off for investors?
So Omelo, I believe this question, it depends on the investor that you are targeting. So you have agri, let's say, investors and a little bit climate tech investor that will be sensible to it because they understand it and they have more patient capital. It also depends on if your technology is involving tech. I know that for a lot of business that are a little bit CapEx heavy, I would say, a lot of investors are not very bullish on it. There is a lot of reasons for that, and it's not individual's fault. I believe that what we are doing in Africa is that we are solving critical problems and we are solving critical pain points. So when you are solving critical pain points, you need to deploy CapEx in markets such as the US and Europe, and even in China, for example. You have, let's say, a public authorities that will take this sometimes non-profitable or very, let's say, low margin investments, because we in Africa, I would say, are in some of the countries, public authorities are not putting a lot of money. So you have also to support the cost for it. So I know that a lot of investors, and depending on the sector, are a little bit reluctant to it because it will affect their margins and their potential return. But depending on the type of, let's say, business that you are doing, because I mean, in agri profit, I will certainly need a little bit more details, but you can still, let's say, find investors that can buy your story around it. It's just about also giving them transparency and confidence.
Oh, brilliant. Wow, I am learning a lot here. Thanks, Jody. I can see people following. I'll quickly read one question that came through the chat and go back to the Q&A section. Please, those who are posting the chat, please type your questions in the Q&A section. So William says, I am a 22-year-old final year law student and a first-year banking and finance student in Zambia. I am currently running a small money lending institution, but I'm foreseeing a barrier in terms of growth due to a costly license for operation. So then this is the question, says, what is the best way to get the attention of an investor fund such, okay, what is the best way to get the attention of an investor, I believe, to fund such a license? So they need money to fund the license, which they say is expensive for operation. So what's the best way to get an investor to fund them for that?
I want to say that, William, you are not the only one having this problem. I know that even the most promising companies in Zambia have the same problem. They have the same problems. And I will say that in a lot of geographies, people have the same problem. I will give you the answer that I'm giving also to companies that are confronted to that. So I'm thinking about two countries. In Egypt, for example, I know that the price for a license is quite huge. It might be something like close to, it was last year something close to $500,000. And I know that in Senegal, when I was several weeks ago, it's also quite high. You should be able, let's say, to build your business so that it will be big enough so that after that you can be able to have your license easily. I will give you the example of Wave, which is a company that is in Senegal, that is or was a unicorn. I believe they are still a unicorn. So even them, they just had their license right now, their banking license. What they were doing is that they were operating in the network of another company. Before that, they had to do like a lot of, and especially when you are in a young market where you have to also educate a lot the regulator. So this is why it's very good to have the help from folks such as Bongo Hive. Is that you also need to be able to build a case. Today is very difficult to convince, let's say, and I don't know the price of a license in Zambia, to be honest, but I'm just assessing. Let's imagine even if it's $100,000, it's very difficult to just promise to investors, I just need this, and then I will be able to execute all those different things. You need to be able to at least execute in a different way. So it can be by plugging your system to APSA, for example. It can be also finding a microcredit, let's say organization, things like that, so that after that, when you will be able to have your license or you will be eligible, you will be able to convince and give comfort, let's say, to investors that even if the market is difficult, even if there is those constraints, me, William, I've been able to build, let's say, this pipeline. My company is already doing that, and I just need the license so that I can be able to generate a little bit more margins and also demonstrate, let's say, exponential revenues. But this is not, this is a very common problem, and this is related to the thing that I was saying, is that we are fixing structural problems.
Great. Then maybe before we go to the next question, I don't know, Jody, if you don't mind being able to share the Q&A slide of your slides.
Yes. You are not able to see it?
Oh, yes, we're just seeing a black screen, so that'd be great.
So sorry, let me start again.
Okay. All right. So we still have a few more questions. We'll take questions up to 2030. That's when we'll be wrapping up. So we've got like 15 more minutes to this Q&A segment. So I would like to be able to pick a question here from Solomon Goma. So Solomon says, hi, Jody, great information. It's so hard to raise in Zambia. We seldom hear of seed funding raised. So based on your experience, why do you think it's difficult to raise in Zambia? What can startups and ecosystem players do to change the landscape or be more competitive? That's from Solomon.
Yeah.
Solomon, feel free to also reach out to Bongo if we can give you some data. But please go ahead, Jody.
I fully agree with what Solomon said, is that it's very difficult for different reasons. First is that you need to keep in mind that so it's very difficult to raise funds in Africa. First, it's difficult to raise funds in Africa. If last year we were happy about like 4 billion, I believe, that was funded in Africa, but it's not even like, and I'm not even joking, but it might be like not even 1% of what was disbursed in France at the same year. So it was and you can see that France is like 65 million people, 67. In Africa, we are like 1 billion, 1.2, 1.4, because we don't know how to count the population yet, but you can see the estimation are quite high. I believe that Zambia, first is that people need to know Zambia. Me, so I've been very lucky to come in Zambia this year, and I was literally like shocked by the potential of the country, literally. So it's something that people of the ecosystem should leverage. They should also be able to demonstrate that even if Zambia don't have the population of Nigeria, for example, or Egypt, there is like market potential for any companies that is coming. So companies can go in Tanzania, company can go also in Zim, company can also extend in Kenya. This is also something that you guys should also be able to demonstrate. Something that is also normal is that a little bit less than other geographies. Something that is missing is also a huge, let's say, local ecosystem with a lot of different actors. So it's also something that, I mean, this is normal also. We are starting venture capital in Africa, but it is also something that will help, let's say, Zambia being much more in the map. And after that, it's also on you guys to knock at the door of public authorities and to see how you can help, how they can help you also to do a little bit more PR, but also to attract more DFIs, more institutional money. As soon as DFIs want to invest in Zambia, they will tell to venture capital, to VC funds, you guys need to invest in Zambia. So, and after that, we will collectively invest a little bit more in Zambia. So this is also things that we need to leverage in the ecosystem. But I believe that there is an event that is coming, the fintech. I don't want to say a bad name or to do a mistake, but I know that there is like a fintech summit coming in Zambia over the next months. It will be also the occasion for a lot of investors and a lot of people to learn a little bit more about Zambia and to see also a different success story and to come to invest.
Most definitely. Great stuff that's coming out from this session. Learning quite a lot. And I can see people still staying on to just get more. So we have 2 last questions. So Wamba Chikweti says, how do you strike a balance between protecting your idea and ensuring transparency with the investor? They say, how do you treat NDAs and how do they reflect on startups' potential relationship with the investors? Yes, please go ahead, Jody.
So I like to say that, but I can just speak for the investors that I know and in general, because I do take the assumption that people are acting in good faith, is that the job of an investor is not to be an entrepreneur. So we are receiving a lot of pitch deck, we are hearing a lot of ideas, but we are not in the execution. So we are not, let's say, here to steal ideas first. And I personally do not sign any NDA if I'm not looking into the data room. Why? Because it just make the process even more difficult. And sometimes when we look at the company and the technology, it's not something that is requiring, let's say, a NDA sometimes. After that, concerning, let's say, the protection between the transparency and also the relationship, I will say that it's up to you. And this is why I was saying that you should not, let's say, send more than your pitch deck in the beginning, because I saw a lot of different situations in the ecosystem where after that, it's just becoming like a problem because people are, oh, sold my idea, or I saw that in your portfolio companies and so on. No, just sending your pitch deck, and you can just not disclose any electoral or any, let's say, very private information in your pitch deck. You are, let's say, more than happy to do that. I will still advise, let's say, to not push an investor to sign an NDA before the first meeting, or let's say, sending your pitch deck. You can share your template of your NDA when he's accessing the data room, because those are, let's say, confidential information. Because usually we are all humans, so some people can be offended when you ask them for NDA before speaking with them. Some people will just say, look, I'm not doing that, but that's okay. So, but you still, let's say, need to manage the type of people that you will meet.
Great, that's a very great response. Thanks, Jody, for that. And I think that's why Jody even did cover, you need to have your elevator pitch. That just pretty much gives a taste, and you can go to a place where you have, a pitch deck. Pitch deck will just really cover the skeleton, but really speaking to the great stuff. But I feel sometimes most intellectual part of an idea is a more detailed approach. So there's certain ways you can manage your dissemination of knowledge. So thanks a lot, Jody. Time is moving, so I'll take these two questions quickly together. Kondwani and Timothy, then Jody will give feedback to both your questions, and will be the last ones for tonight. So Kondwani says, when you review a startup's data room, what key factors influence your reason to invest or recommend the company to other investors? Sorry, I hope you heard me.
Yes, I will try to, let's say, I'll try to use the elevator pitch for me on this answer. The key factors. So I will look at an investment thesis that I know by heart. So the key factors will have different key factors and a lot. So we have internally a kind of matrix of different criteria when we will put different elements. So when I'm looking at the data room, I'm looking at the team. So I need to see a management team that makes sense for me on the paper. So for example, me, Jordi, have the background in finance, corporate finance. If tomorrow I'm starting to do what can be very different. If I'm opening, let's say, an art gallery and I have nobody that know anything about art, for example, it will be a red flag for me, or something like that. I'm looking at the financials. If the actuals are making sense, and also if the projections, I can see, let's say, a path to profitability and path to exponential growth. I'm looking at the market that you are targeting. I'm looking at the market potential of this market. I'm looking at your competitors and your unique selling proposition. Are you really better than your competitors? I'm looking at the exit opportunities. So trying to see if it is something that we can also exit from. And I will look also at the impact framework. When I'm speaking about impact, so I showed, and I will go through the 6 different items that we are looking at. Sorry. So yes, I will look at those 6 elements also. Is your solution pushing for one of them, a few of them, or all of them? It will be also something that will be quite, let's say, a key factor or investment decision. So I hope my answer was clear because it was a lot, and more than happy, let's say, to write a little bit something that is more established.
Thanks. We got a thumbs up, so I believe you answered that. So the last question that we are taking for tonight is from Timothy Mvuti. He says, hey Jody, my name is Timothy, co-founder of Blue Money. Says, thank you for the wonderful presentation. one of the most difficult things in our startup journey is startup valuation. So his question is like this: is valuation by stage an okay method? Then he says, for example, $500 to $1 million when you have a working prototype, 5 million when you have clear signs of revenue growth. So his question is valuation by stage an okay method?
Well, Timothy, this is a good question, and a question that I will disappoint you, but I don't have the exact answer. But but I will give you some elements. The problem with venture capital is that we have a lot of different methods for the valuation. So it's not like private equity or M&A when you are, let's say, available public data and market multiple. We also are, let's say, in a country, in a geography where it's also very difficult to find comparables. So what we are looking at when we are looking at valuation is that we are looking at different framework, different methods, and also trying to take into account the how do you call it? Diversity of the cap table, but also the amount of, let's say, shares that the CEO will be able to, let's say, give to the investors. The problem, I will say, with valuation over the last months and years, and this is my opinion, I'm not saying that it's other people's opinion and so on, and it's just gauging me, is that we have been very and too much optimistic about the valuation. I've been seeing a lot of companies in Europe like demonstrating 10 times revenues on fintech, for example, having valuation much lower from what I was seeing in Nigeria, in Kenya, and so on, which is on the paper good for the founders because they can still, let's say, increase their valuation and hope for a good exit. But the problem is that we don't have a lot of exits in the market. So the thing is that the valuation now is becoming something that is even more a topic for discussion. We are still lucky that in the ecosystem we are still doing safe notes. So discussing on the valuation that will be, let's say, done after the first equity or direct equity round. But I would say that there is not like one magical valuation that you can have. There is not like, depending on the stage, you can go on a specific valuation. I believe that this valuation part should be like one of the last topics that you are discussing with your investors when they invest in the company, or when they give you like at least a term sheet, so that you can be able to negotiate. I will advise you, let's say, for the first time that you are raising fund, to not dilute yourself more than 25%. So between 25 and 15% is still okay. If you succeed to let less than 15% of your company to new investors, that's wonderful. But 25% should be, let's say, the hard cap that you are able to accept when you are raising funds. For the first time, huh? For the first time. After that, you should decrease it a little bit, this 25% hard cap.
Wonderful. Thank you. Thank you. And Timothy does say thank you in the chat. This has been an amazing session today. Listening to all that wisdom that you've just shared with us, Jody, this is worthwhile. And, I don't think there are thank yous enough to really appreciate you for the time that you've taken to be part of this and to just feed into the startup ecosystem that we have here in Zambia in the local space. I have noted there are people as well who are not currently based here. I saw some people who are tuning in from the UK, but some of those people are actually still anchored to Zambia, and I believe this has really been what people wanted. I saw Kondani say very exactly what I was looking for. So thank you again once more. And to all the startups on the call, we are so delighted that you found the time to actually come through and be part of this. So even as we'll be soon coming to an end, I would just like to thank Jody as well for being part of this, and also the Octera team for permitting you to be able to have time in your schedule to come and share with our startups. We are very grateful.
Thank you.
Yes,
Thank you to you, Mapado. Thank you for the team. And I mean, as I like to say, it's not about only like Octra Capital investing in companies. It's about like the whole ecosystem growing up. So if thanks to the small information that I've been able to give, tomorrow someone is able to raise money, I will be more than happy. And I really think that in Zambia, even more than in a lot of countries that I'm seeing in the continent, there is a huge potential. There is a lot of things to do. So it's great to be able to do my small share of it.
Wow, thanks. It's great to have people like you out there and giving back as well with all the knowledge that you have. And those of you that would also really like to maybe go through what Jody shared, please be reminded that we have been streaming these sessions on our socials. So this session was live on Facebook and YouTube. So just go to Facebook. If you're not already following Bongo Hive, then you are missing out. So go to Facebook, like and follow our page. You'll be able to find the session online and you can go through it. Make sure you internalize it so that it's not just something that you heard, but something that you can actually act on. And the earlier, the better. And we also post a lot of updates on our pages. We post updates for programs, for updates for uh, different things that we're working on. And we also have a newsletter on our website. So if you go to bongohive.co.zm, you will find an ability to access our newsletter. So for those of you who never hear when we've got a program, maybe that you're not subscribed to our newsletter, we always send out our newsletters on Mondays. So if you really want to ensure that you are first in line to hear about a program, make sure you go and subscribe to our newsletter. But thank you once more, all of you, for being on the call and staying up to this time. Those of you who came in from the Octera team, we're also grateful that you did show up on the call. And from me and the Bongo Hive team, we wish you a lovely good evening if you're in this part of the world. And we wish you well in your endeavors. Please keep on growing. And thank you, Jody, once more. That's a good night from me.
Thank you very much to everybody. Have an excellent night and an excellent week or so.
Thank you. Awesome. Hi, everyone.